we started an in-situ mine on our big project. It didn't work. And we were punished. And we went through 2023 in the doldrums. In 2023 and 2024, we brought Newton LLC, which is a Rio Tinto venture company, into our Johnson Camp mine. And in just over 12 months, we're now producing copper. We sold our first copper cathode this month. That's a massive transformation. I don't think people have kind of fully worked that out yet. But on the in-situ project, we pivoted that to an open pit in 2024, December 2024, by tying up the ground around us. That was the transformational event that allowed us to move from in-situ to big open pit. I don't think the market's cotton on. They will as we keep moving these projects forward into PFS. So usual disclaimers on forward-looking statements. I'm not going to read that to you. This is the long section through part of our project area. We own the whole mining camp down in Arizona. I live in Phoenix. The management team are in Phoenix. The big green blob that's on the left of the screen there, that's the Gunnison project. It's about 3 kilometers long. And that's the resource shell. You can see the drill holes in it. That's the one we started the in-situ on. Not so successful, not a proud time in our history on that one. But pivoting to the open pit was brilliant because we tied up all the land to do that. So I'll talk more about that. It's PEA, but we're going to update the PEA towards the end of this year because we've got some new results we think are fundamentally going to make that look even better. The little one in the middle, that's Johnson Camp. It's in production. We're working with Newton. They do what's called sulfide leaching. I'll talk a little bit more about that. But the team have brought that into production without a lost time incident, without an environmental incident. And, we've spent a lot of money there. Newton are fully funding 100% of that project, so it's non-dilutive for us. All right. So this is Johnson Camp. The picture there is copper cathode. We produce 99.99% pure copper metal on site. It gets sold directly into the US market. We're getting a lot of support from the state, a lot of support from the politicians doing that, obviously in this era of critical minerals and supply chains in the US. That mine has got a big leach pad and it's got 2 piles on it. One pile is copper oxide. You put some acid on it, dissolve copper, collect it in a pond, make metal with electroplating. There's another pile that's sulfide. That's what we're working with Newton with. This is going to be the first time that this technology is being used in the world at this scale. And so Rio are putting a lot of money into this. We're like the test case for it. Those 2 process streams will verge into our nameplate production sometime next year, first half next year, about 25 million pound per annum. So we're a producer. That little mine that I just talked about, it's called Johnson Camp. It's up on the top left-hand side of that picture here, you can see. Just 2 kilometers south of that is our Gunnison project. That's the PEA design. 1 big pit, waste dump, big leach pad to the south. Further south, solvent extraction, electrowinning plant. That has a direct connection or spur to the main trunk line of the Union Pacific. So you can bring stuff in and stuff out very cheaply on the site. So, this project, NPV, US dollars after tax, nearly 1.3 billion. And we used a $4.12 copper price. Our market cap today is $80 million. There's a really big disconnect. That disconnect is because we were haunted, right? So hopefully people will realize we're no longer haunted. 170 million pound per year production potential on this project, all-in sustaining cost just under $2 a pound. So if we can make a $2 margin at $4 copper and do 170 million pounds per year, that's 340 million US dollars free cash flow per year. It's an 18-year mine life. This is a big project. So when we did the PEA, there was a whole bunch of things that came out of that we think we could make the project better. They're not in the current model. We've been working on them in the last 6 months. So we thought this was really neat. It's a little transformative, we think. I think the market missed it as well. This is some of our drill core. So unlike a lot of sort of big copper projects, it's actually high-grade oxide veins, sort of like 20 centimetres to a metre wide in a sea of waste. All that's going on the leach pad. So we looked at that and said, if I can see the difference between mineral and waste, so can a machine. So we went out and drilled some big holes this year. We took a whole bunch of samples. We sent them off to this commercial scale optical sorting facility in Kentucky. We ran the samples through it. It spat out the back end 2 piles, a good pile and a bad pile. I mean, it's literally that simple. All the machine did is say, if it's light coloured, it's going to be waste. If it's dark coloured and got some green in it, it's going to be mineralised. It's not rocket science. So in the good pile, that was about 53% of the sample went to the good pile. 99% of the copper went to the good pile. We stripped out 90% of the waste that had no copper in it. What does that mean? What that means is that we can potentially double our process head grade, because we're just taking waste. Before we go and put it on a leach pad and spend money on acid, take the waste, put it to the side, keep the copper, twice the grade. That means lower capital costs, it means lower operating costs, it means a higher head grade. Really good outcome. Early days, got more work to do, but I mean, this is, to us, this is like a discovery hole, because the project's already good, this is just gonna make it better. So, I mean, we had some other things too that we're working on. This is a cross-section through the pit. It's just one big fat ore body, or mineralised body. There's gravel on top, and then there's limestone. And so, in our model, we're just mining this as waste and throwing it aside. And we're like, surely this has got some value. The limestone looks like, what you put on your kitchen counter. So there's a lot of it. There's, 85 million tonne of limestone coming out. So we've got some experts working on that. We've got assays happening. We're doing a market study. We hope to take this study and the ore sorting, update the preliminary economic assessment before the end of this year. We think it's all positive. Lower capital costs, lower operating costs. It's looking good. That's Gunnison. So, catalysts. Your shareholders, or we hope to be, you're going to be shareholders. What news flow are we coming? There's like 15 major catalysts over the next 18 months, 12 to 18 months. Some of them relate to Johnson Camp as we start to bring Newton into production, as we start to generate copper from sulfide leaching. A lot of them are to do with this high value add program, the limestone, the updated PEA, moving into PFS next year, also going to be moving into permitting this year. The project, the big Gunnison project, was previously permitted as an in situ, no US federal nexus, but we do have to amend the permits. Now it's an open pit. So, look, there's some great companies on the slide here. These are all down in Arizona. These are kind of development stage like us. You look at their price to net asset value, they're 3 to 4 times what we are. Why is that? It's because we're haunted. It's as simple as that. So great, I love it. So we keep delivering on our results into the market, on our programs on the ground, in the structure of the company, on our Johnson Camp mine. We're going to close that gap over the next 6 to 12 months, and everyone, I hope, is going to be happy. I'm a major shareholder. I'm very dedicated to getting fair value for our assets. So that's my presentation. Thank you.
Thank you, Steve.
Good on you.